Hi, thanks so much for watching. This is Zoe, and today we're going to talk about whether you should time the property market. Now, we often hear people say, I should have bought the house, 5 years ago. So let's take a look at some facts and figures. So let's take a look at the private property price index since 1975. Now, do remember that there was a financial crisis in 1997, a dot-com bubble in 2000, and there was SARS from 2002 to 2004. But despite all this, past data shows that property prices has an overall upward trend with cycles in between. So we often hear people say, I should have bought in 2006. I should have bought in 2017. And then when the opportunity arises, they'll be like, oh, it's so expensive. But you realize that in 2017, that price was considered record price at that point of time. And in 2006, that price was also considered record price at that point of time. So the record prices are going to continue to increase as compared to the previous cycle. So there are two costs of waiting that you need to consider. Now let's take a look at one of the costs of waiting, and that is definitely paying for a new price tag. And this is due to increased land costs. If you were to take a look at this graph that shows you the land prices at One North in RCR, back in 2017, Momentum Park was sold at 969 PSF. In the recent September government land sale, Slim Barracks was sold at 1246 PSF. In over a period of 5 years, a 1000 square foot unit would have cost less than $1 million in 2017. In today's market, a 1000 square foot would cost 1.2 million and upwards. Now, the second cost of waiting is paying more for a smaller unit. So if you were to take a look at this graph here, it shows you from 2005 all the way to today, new homes are not getting bigger. It's getting smaller across all the regions. And this is also one reason how developers break even. With the increasing land costs and construction costs, they would have to sell at a higher price for a smaller space. So I hope you found this useful, and I'll see you in the next tip.